What if I told you that while everyone's panicking about inflation and rate hikes, some stocks have quietly soared over 100% in 2025, and barely anyone's talking about them? These aren't hype plays or meme stocks. These are real companies, with real earnings, quietly dominating. So what's behind the boom? And is there still time to jump in? Today, we're revealing 9 booming stocks that are crushing the market right now. One of them is still under $10, and growing faster than Tesla in its early days. Let's dive in. Let's start with Roblox Corporation. Ticker RBLX. Roblox isn't just a video game. It's a digital platform where users, mostly under 25, create and monetize their own virtual experiences. And in 2025, Roblox is having a breakout year, with shares up more than 81%. One of the biggest drivers of that growth? A court ruling that forces Apple to allow third-party payment options. That means Roblox can now bypass Apple's 30% cut and keep more of its revenue. A huge boost to margins. Citigroup responded by raising their price target from $100 to $123. But Roblox isn't stopping there. They're expanding into educational tools, virtual concerts, and even job creation within the platform. It's evolving from a game into a full-fledged digital world. The upside here is massive user engagement, freedom for developers, and better monetization. The downside? They're still unprofitable, rely heavily on younger users, and continue to face safety and content moderation issues. But if young people are spending hours every day in virtual spaces, could Roblox become the next generation social platform? Next is Tencent Music Entertainment Group, ticker TME. When you think of music streaming, Spotify or Apple Music probably come to mind. But in China, Tencent Music is the dominant player, boasting over 600 million users across platforms like QQ Music, Kugu, and Kuwo. But here's the twist. They're not just about music anymore. In 2025, Tencent Music is making a big bet on long-form audio. We're talking podcasts, audiobooks, and talk shows. This shift is expanding their reach and increasing the amount of time users spend on the platform. They've also invested globally, acquiring nearly 10% of South Korea's SM Entertainment, home to K-pop sensations like EXO and aespa, giving them powerful intellectual property and regional influence. Financially, they're in strong shape. First quarter revenue came in at 7.36 billion RMB, beating expectations with solid adjusted profits. The opportunity here lies in their sticky user base, diversified audio strategy, and strategic partnerships across Asia. But the risks? Regulatory uncertainty in China and stiff competition from both local and global players. So here's a question. If Spotify is the king of the West, could Tencent Music become the crown jewel of the East? Then we have Palantir Technologies, ticker PLTR. Palantir is one of those companies people talk about but rarely understand, and that's by design. They develop powerful data analytics platforms used by intelligence agencies, militaries, financial institutions, and global enterprises. In 2025, their stock is up more than 90%, and the reason is simple. Palantir has become essential. They secured a high-profile contract with the U.S. Navy, nicknamed Warp Speed for Warships, which aims to modernize military logistics using advanced software and artificial intelligence. They're also expanding globally. The Czech National Bank recently increased its Palantir holdings by 49,000 shares, an impressive vote of confidence from a traditionally cautious institution. The company's strengths lie in its profitability, its competitive moat in data infrastructure, and its deep roots in government and defense sectors. However, challenges remain, such as its high valuation, reliance on public sector clients, and continued skepticism from Wall Street analysts. But if Palantir ends up being the operating system for global decision-making, just how big could this get? Moving on to Symbotic Inc, ticker SYM. Symbotic is changing the way retail giants run their warehouses by using robots. Their AI-powered automation systems sort, pack, and manage inventory far more efficiently than human labor, and their biggest client is none other than Walmart. In 2025, Symbotic's stock climbed more than 90%, and second quarter revenue surged 40% year-over-year to reach $550 million. They also appointed a new CFO, Izzy Martins, to guide the company towards sustained profitability, a rare goal for a robotics firm in this phase. The upside here is clear. Symbotic has a first-mover advantage in warehouse automation, growing demand from mega retailers, and a scalable business model. But on the flip side, its sky-high valuation has some analysts warning of short-term pullbacks, especially as competition ramps up in the automation space. Still, with supply chains more important than ever, could Symbotic become the backbone of retail logistics? Let's talk gold. specifically Anglo Gold Ashanti, ticker AU. You might not expect a gold mining stock to boom in 2025, but Anglo Gold is up an impressive 91%, and it's not just about gold prices. With economic uncertainty lingering, investors are returning to gold as a hedge, and Anglo Gold provides diversified exposure with mining operations across Africa, the Americas, and Australia. What sets them apart is their operational strategy. They've divested from underperforming assets in Brazil and Canada and are reinvesting in higher-yield projects. That's helped them improve margins and focus capital on what's working. The upside is strong during times of global volatility, with a relatively low price-to-earnings ratio compared to peers. But the risks are clear. Their fortunes are tied closely to the price of gold, and geopolitical instability in emerging markets can disrupt operations. Still, if inflation sticks around longer than expected, could gold, and miners like Anglo Gold, be quiet winners? Now let's go interstellar with AST SpaceMobile, ticker ASTS. This company is building satellites that beam 4G and 5G internet directly to your phone. No towers, no Wi-Fi, just full bars, even in the middle of nowhere. Their stock has jumped 96% this year, and they just secured a $100 million financing deal to support satellite deployment through 2031. Imagine being on a mountain trail or a remote island and still being connected. That's the future AST is trying to build. The potential is massive, with a huge addressable market and first-mover advantage in satellite-to-phone technology. But the hurdles are equally big. This is unproven tech with high upfront costs, and they haven't turned a profit yet. Still, could ASTS become the SpaceX of global telecommunications? Surprisingly, Banco Santander, ticker SAN. This is also on this year's hot list, up nearly 100% in 2025. Santander is undergoing a quiet transformation, marked by its acquisition of the UK's TSB banking group. That move added 5 million customers and £35 billion in deposits, making Santander the third-largest personal bank in the UK. While many banks are cutting back or standing still during uncertain times, Santander is expanding, and it's working. Their global presence, smart acquisitions, and push into digital banking are paying off. The risks, however, include their exposure to European economic shifts and sensitivity to interest rate changes. But if traditional banking is reinventing itself, could Santander be the one leading the way? Next up is NuScale Power, ticker SMR. Based in Oregon, NuScale is developing small modular nuclear reactors, compact, efficient energy sources that could power entire towns with zero emissions. Their stock has doubled in 2025, supported by increased demand for clean energy and backing from the US government. NuScale holds a huge advantage with regulatory-approved designs, which put them years ahead of competitors. But execution remains a challenge. They have limited near-term revenue, public skepticism around nuclear energy, and high capital requirements. Still, if the world is serious about hitting net zero targets, is nuclear energy, especially in modular form, the answer? Finally, we have Hims and Hers Health, ticker HIMS. This digital healthcare company is rewriting how we access medicine by making it affordable, convenient, and direct to consumer. In 2025, their stock is up more than 103%, driven by the launch of a generic version of semaglutide in Canada, right after Novo Nordisk's patent expired. Semaglutide, of course, is the blockbuster weight loss and diabetes drug that's reshaping the industry. Hims also made a big move in Europe by acquiring Zava, which boosted their user base by 50%. The advantages here include being a first mover in online obesity care, a scalable pharmacy model, and strong brand loyalty among younger consumers. But the road isn't without bumps. Regulatory challenges, pricing pressure, and rising competition all remain in play. Yet, if telehealth is the future of medicine, could Hims be the brand we all turn to next? Looking at the numbers side by side, it's clear why these stocks are booming in 2025. Tencent Music, with a moderate EPS of 0.85 and 43.1% gross margin, shows how content diversification can boost profitability. Roblox, despite its high price point and strong market cap, still struggles with margins and profitability, with a gross margin of just 27.54% and negative EPS of minus 1.34. On the flip side, Palantir impresses with an 80% gross margin and a return to positive earnings at 0.23 per share, signaling strength in both government and enterprise sectors. Symbotic's razor-thin margin of 16.87% and a tiny EPS of 0.07 highlight the challenges of scaling automation hardware, even while revenues grow. Meanwhile, Anglo Gold Ashanti stands out with a strong EPS of $2.33 and a relatively healthy 31.38% margin, proving that old-school assets like gold can still deliver in uncertain times. Then there's AST Space Mobile, a high-risk, high-reward play, showing an alarming EPS of -$2. Santander, on the more traditional side, boasts a rock-solid revenue base of $146 billion with a modest EPS of 0.87, proving that even big banks can outperform with the right strategy. NewScale Power and Hims & Hers Health bring the clean energy and digital health narratives into focus. NewScale's solid 76.67% gross margin is promising, though the EPS remains negative at 1.37. In contrast, Hims is firing on all cylinders with a 69-cent EPS, 68.19% margin, and a $1 billion revenue base, all from an $11 billion market cap. That's the kind of efficient growth investors love to see. So here's the big question. Which of these stocks still has room to run? And are there other hidden gems out there flying under the radar? Drop your thoughts in the comments below. Let's talk about it. And here are 5 hidden gem stocks under $20 you'll wish you bought sooner. Click on this video here.